So the futures are currently selling off and SPY is heading back towards those 52-week lows. In terms of the macro price action, we have been anticipating that the SPY was going to see new 52-week lows within time. The question is, for the short term, for the micro, is this going to be another bear trap where SPY hits 405 like it did 2 times within the past 5 trading days, and then it has a rapid micro reversal and squeezes the bears? Or is this finally going to be a bull trap at the dip, at the 52-week lows, where that macro expected move kicks in and SPY finally sells off, cracks those 52-week lows, and then goes to 400 or even into the 390s, right? This video is going to give you a much better understanding on where the SPY is headed for the micro price action. I am going to prepare you to trade the best setups at the best prices. We are going to be going over the SPY, the VIX, UVXY, EOG, Roblox. Those are my top stocks heading into this week. I'm going to show you how to trade these both ways. So without further ado, let's get right into this in-depth price action analysis that's going to show you how to trade. It's going to show you how to trade the charts, right? Make sure you smash that like button, subscribe to the channel, and I did upload a trade recapping my trade on Friday, which was a phenomenal trade. If you haven't seen it, make sure you go back and watch the previous video. I uploaded it very late, so some of you guys missed out on that one, but let's get right into it. So in terms of the SPY, as you can see, this closed at 411.34 on Friday, and it is currently gapping down as futures are selling off. As of now, it has bottomed out at 405.88. So I want to bring some awareness in terms of micro bear traps that have occurred 4 times throughout the past 52 weeks on the SPY. You can see right here the 52-week low is at 404. It quickly rockets into the 418s. You can see right here it came back towards those 52-week lows, bottomed at 405.33, and then it quickly rocketed to fill this gap here into the 420s. And you can see in terms of recent chart history, throughout the past 5 trading days, SPY has bottomed at $405.02, and then it rocketed back up to fill this gap, which is the best price. I told people to buy puts when this gap fills at 427.81. That's what I had recommended in my video analysis. As you can see right here, it had a gap close reversal, sold off hard, filled this gap right here, had a reversal, sold off hard, and it is now back in terms of Friday, having that gap close reversal, losing its gains, and headed back towards 405.73. So is this going to be like a triple bottom as it's now gapping back down to that 405 level? Or are we going to see finally the new 52-week lows? So let's get into this, guys. This is going to be very important. So in terms of this huge, in terms of this macro sell-off that people are expecting for the 52-week lows, obviously it's going to happen. Here's my current beliefs. I think it's a little too good to be true. In terms of the micro price action, bears have been getting squeezed and they've been getting slaughtered and they've been getting trapped if they were to buy puts in short on that 405 dip, which is why I always like to focus at that previous closing price at that key resistance level. Like I had recommended, people were asking about SPY puts on Friday. If you do want to play the puts, you have to wait for the previous closing price, which was literally the high of day on Friday, this blue line right here. So with that being said, in terms of my views, I think it's a little too good to be true, and I think you should stay away from buying put options on the dip. That's my current opinion. So in terms of this 405 level, I wouldn't try buying puts at that key level. I personally think we can see a little micro bull rally. One of the reasons why is we are just so micro overreacted to the downside. From April 21st, this was in the 450s. We are now all the way down to 405 rapidly. And these overreactions have been very rapid. You can see right here, SPY has an overreaction. It sells off hard. It rips back up to fill the gap, right? You can see right here, SPY has an overreaction. It sells off. It goes even lower, and it rips back up to fill the gap. And we now have another gap to fill at $429. Due to this pattern and due to this history where SPY really likes to bounce off this 404, 405 level, I would strongly not recommend to buy puts on the key breakdown. I don't think the risk would be worth the reward in this situation. And another thing you have to understand is if you do play the key breakdown, you have to understand this is just such a strong key level to be shorting, to be buying puts, where if it goes against you, you have to get out extremely quickly because your entry is poor and the volatility is high. When SPY rips, it rips up very, very quickly, and that occurs at the best prices. Bears have been getting slaughtered in terms of attempts of shorting and buying puts at the 405 key level, which is why I wouldn't fight that volatility and I wouldn't get a poor entry. It's very dangerous, right? At some point, SPY is going to spike back to these gaps anyways, so trade the best setups at the best prices. So my whole theory is, and what I believe can happen is, I think SPY can have a micro reversal. I think we can rip back up to 411.34. There's a gap to fill at 411.34. I strongly believe that gap is going to fill this week. And I do believe it can potentially go from red to green tomorrow. I think that's possible. It's a little too early to say because in terms of price action for tomorrow to get a really better look in certain situations, and this would be one of those situations, I would have to see the pre-market and how it reacts at market open. But in terms of this week, I can confidently say that I do believe SPY is going to rip back up to 411.34, most likely sooner than later, but it should happen this week. So I would stay away from puts at the key breakdown. Don't worry about missing out. At some point, it's going to rip back up and that'll be the opportunity to buy the puts at resistance. Now, if 405 cracks and that turns into resistance, how low can SPY go realistically for the short term being? That's the question, right? So say the bears take control, they crack 405. The next level is 52-week lows, right? People think that, oh my gosh, you have this 405 support level with big upside potential. So if it cracks 405, you have big downside potential. Not so fast in this particular situation because SPY can rip very quickly with its overreactions when it has that downside move at a key support level. And your next support's at 404. So even if it does crack 405, you have very heavy support at 404. Now, if 404 cracks, how low can it go from there? If we go back throughout the chart on the SPY, you can visually see right here, if we crack 404, we will be on track to fill the gap. There's a gap to fill right here at 461, which is the lowest I can realistically see it going for the micro. So that would be around that key price, that 461 level. Keep in mind, the bears for the past 52 weeks now have been getting killed once, twice, 3 times, 4 times buying puts on the dip. Quickest way to lose money and enter an extremely bad options trade is to get a poor entry and trade at such a high volatility level where it can rapidly go against you, right? SPY likes to spike big very, very quickly at these key support levels with big upside potential. And you have to keep in mind, it's also an overreaction, so it's due for some sort of reversal. So my opinion is micro bullish. I'm thinking micro bullish. I'm thinking we rip back up to 411.34 to fill the gap this week. And then that will be our new key level. 411.34. If it reacts as a resistance and you see the gap close reversal, play a quick micro put like you could have done on Friday twice and like you could have went short on shares in the pre-market, right? So much opportunity within this market. So in terms of micro puts, I want to see how it reacts at 411.34, but I do believe we can even potentially see for the short term within time by Friday, a rip to 429 as well. So the best price for puts is 429.06. The middle price, which is really going to help determine whether SPY is going to have this macro sell-off, new 52-week lows sooner than later, is going to be this 411.34 to 413.81 zone. For SPY to have a big, massive reversal, it has to break above 414. 414 is a big downside potential level, and you can see once it reacts as a support level, right here, and it breaks out, it rips back up to fill the gap. And you can see when it reacts as a resistance level, which it did on Friday multiple times, it breaks down back towards those 52-week lows. So the middle is going to be 414. That's your make it or break it level. I do want to see how it reacts at 411.34 because we do have a gap to fill there. But that's my views. That's my thoughts on SPY. I'm thinking, bears, the puts printed at market open, so much money to be made on Thursday and Friday if you bought puts at open on the vast majority of stocks, they sold off. SPY sold off very hard. Those were two huge green days for put options that expired, the same day, Thursday, same day, Friday, that expired very, very quickly. The puts went up 400% plus. So much money was made within these 2 days. And now SPY is gapping down. So for those who ended up swing trading puts, that's going to be their third day in a row where they can bank. So my theory is SPY rips back up and it squeezes the bears. It's just a little too good to be true. It's definitely heading back to 411.34 in my opinion this week. So don't get suckered into this, man. Bears just had 2 amazing red days in a row where the puts went up 400% plus within the first 30 minutes. And those were the at the money put options. People made so much money. And the ones who get greedy, which is what I call the hogs, pigs get fat, hogs get slaughtered. If you're buying puts this low, knowing that the puts printed like crazy the past 2 days and knowing what can occur towards this 404, 405 level, right? It's one of those situations where hogs are going to get slaughtered. Don't be a hog trying to chase a 404, 405 key breakdown, especially when SPY's already had a massive pullback and the puts have already printed like crazy 2 days and now on track for 3 days at market open tomorrow. If you swing traded puts, I just believe in terms of this situation, it's going to be a lot of greed. A lot of greed is going to be created, man. People are going to be like, it's finally the end of the world. It's time to buy put options at the open. And I think they're going to get squeezed. And I think this gap from 411.34 is going to fill this week. So I think we're going to see another bear trap created. That's my thoughts. That's my opinion. So we'll see. We'll see how it reacts. We'll see how it reacts towards this 404, 405 support level. If it looks strong in the morning, maybe I'll do a call. I will say this in terms of like best strategies, in terms of what I teach, it's not buying into this call option on the dip at 404 to 405 to fill the gap at 411.34. I personally think it'll work out if you give yourself enough time and go with an at the money expiration. You give yourself at least a week on the contracts. I think it'll work out personally. Just know that's not like the best strategy of what I teach. That's not the best thing to be doing. So if I do take a call option trade at that best price towards the 405, so I can get in, it's going to be a much lighter side because I know what works best. And that's what I do. I know my one thing. I know my one thing that works best, trading the best setups at the best prices. I know what that looks like. And for me personally, that's going to be when SPY hits 429. I'm laser focused on trading the best setups at the best prices. The market is giving me about 12 amazing game-changing opportunities. And I've noticed that Thursday and Friday have been some of my best trading days, especially with those 0-day expirations, right? You can make like 300-400% within the first 30 minutes. So I'm just really trying to narrow it down to the best ones. And it's looking like we're going to be aiming for about 12, 15 trades per month, about 12 trades per month. So that's what I'm focused on, guys. I'm scaling this account. I'm compounding it. I'm staying disciplined. And I know what that best setup looks like. And I really just got to wait for it because it will spike back to those levels within time. But that's my thoughts. And in terms of the VIX looks like death. We have a gap to fill right here at 1737, right? 1738, Fetty Wap, right? 1737, right? So we have this gap to fill right here at 1737. And this is bearish. We have this gap to fill right here. It had a reversal. It sold off hard. You have this death candle right here. What happens when the VIX forms this death candle, right? This candle right here. You could see it double topped. History is going to repeat itself. It's going to be on track to fill the gap below at 1737. So I'm bearish. I'm bearish on VIX. I think it's going to sell off into this week, start to go back down to kind of fill that gap. I'm extremely bearish on the VIX. And then UVXY, same thing. You can play UVXY as well. You can see it's the same exact chart, same exact pattern, just a slightly different price. UVXY, there's a gap to fill at 1406. So yeah, we're gonna have to see how these react tomorrow. See how these look towards these key resistance levels, towards these double top. UVXY has a gap to fill at 1997. There's also a gap to fill at 2201. So if I see resistance come in at one of those key levels, I'm going to be playing the puts on UVXY. So I'm looking at 1997 and the best level is 2201. If I see it react as a resistance, bearish confirmations form, I will be buying puts on UVXY. This is going to be a number one setup. My number one setup heading into this week is going to be on, SPY puts at 429. Whenever that happens, it should occur this month. And then the UVXY. I want to see how UVXY reacts at these gaps. If it rejects, I will look to buy the puts at one of these key gap fill levels. And then EOG, shout out to members with and Traders Society who recommended this one to me. This is a stock that I'm seeing an opportunity on. We got big downside potential on this stock, EOG, and it is just ripping at all-time highs, due for some sort of pullback. You can see right here, it got to a high of like $129.53. Big downside micro potential. Highest gap to fill above is at 128.35. It appears to be. Let me double check that here real quick for you. So yeah, actually no. Let me double check this. Yeah, so 128.35 is the highest gap to fill above. So the game plan with this one is to just wait for the first red day. Once this has the first red day, it should be a very nice big red day where it closes weak at the lows. And it could possibly even be a nice micro sell-off for a swing. So the game plan for this one, very simple. When it has the first red day, buy puts at open. If it goes green to red, buy puts at open. Now, if it gaps down already big, wait for it to rip back up to the previous closing price. That's what you got to do. And then once it goes from green to red, then you buy the puts. Ride it back down, start to fill that gap at 123.42. This is an A1, number one setup I'm seeing. What this setup would be called is shorting, buy and put options on a stock that has its first red day, that is breaking out past all-time highs, that has proven strong resistance with big micro sell-offs, right? So it's due for some sort of pullback, some sort of drop, right? And the best price when it has that gap down is going to be the previous closing price. If it's not too far off from that previous closing price, you can take starting positions for that big downside move. This is a perfect example. Look at this pattern right here. Blast off to new all-time highs. First red day, it doesn't go back to the previous closing price and it closes weak at the lows. So if you were to wait towards the previous closing price, the best price, you would have missed out on the opportunity. However, look what happens the next day. It rips back to the previous closing price. Boom, micro sell to fill the gap below. Same thing, it filled the gap below. You see how phenomenal the strategy is working with this stock? It's crazy. There was a gap to fill. I showed you in the 128s. It nearly filled this gap, had a reversal the next day, came back to fill this gap, had another reversal, came back to fill this gap, had another reversal to fill the gap below. It's crazy. The strategy is working phenomenal on this one. So like I said, if it goes green to red, buy the puts. If it gaps down, you can take a starting position at open. Just know your risk is you can get squeezed for that gap to fill. So it's just a starting position. And then you add into size when it goes from green to red to fill that gap. And then once you get the green to red move at that previous closing price, that's when you gain confidence and start buying those put options. This is an A1, number one setup that I'm expected to kill it and crush it on. This is one of the best setups that I'm seeing for this week. I'm waiting for that first red day. Once we get the first red day, I look to go short by the puts at the previous closing price. If it gaps down already on the first red day, instead of going from green to red, not gapping down, then I'm going to take a starting position as long as it's close to the gap, and then I'll add once it fills that gap and goes back to red, right? And if it doesn't, then I cut my loss quick. So that's the game plan for EOG. And then Roblox. In terms of Roblox, what I've noticed is, as this is now getting new all-time lows, I've noticed is it likes to have nice little micro reversals when it gets new all-time lows. So the plan for this one is to wait for the first green day. Once Roblox has the first green day, this could be a swing trade as well. I'm looking to do a micro call option trade. So for this one, I'm just waiting. It's like the inverse of EOG in a sense. I'm just waiting for the first green day. And this would be my least confident setup out of all of them. But that's what I'm waiting for. I'm waiting for it to have its first green day, and then I might do a nice little quick scalp for some micro calls. It could end up being a swing trade. We have to see last 5 minutes into close or when swing trades are determined. Other stocks that are on my radar, MRK, I'm waiting to buy some leap put options. Ideally, I would want this gap to fill from 90.54 first before buying those. CVX, I'm still waiting to buy some leap put options on this, waiting for those bearish confirmations to come in towards key levels, towards key all-time highs. Snapchat is on my radar. It's getting interesting. You know, we just filled this gap right here from earnings at $24.50. We just nearly filled it. So Snapchat's getting interesting. It's just on my radar. Don't have too much to say about it in the moment. That's one of those things that's going to be more, you know, in the moment I have to see. So yeah, those are the best setups. Like I said, UVXY, SPY, and EOG. Those are my top 3 heading into this week, those 3, right? And if you do want to be a part of Trader Society, my private group, the team, that's going to be the first link down below in the description. Watch the short video, read everything that's included within the page, and if it sounds good, if you feel like it's going to be the right fit for you, if you want to invest into your education, that opportunity is going to be there for you, right? So that's going to be the first link down below in the description. You can get started trading live with us on stream at Market Open every single day starting tomorrow morning. You also get access to the written watch list, the stock analysis posted within the chat, the real-time updates, the real-time trade alerts, the video lesson library that's going to teach you how to trade price action, how to trade both ways, how to trade the options, how to trade the unique gap trading strategies that I've created, psychology, risk management, position sizing, mindset. All that training is in there. I'm telling you, I'm going to make you disciplined. I'm going to make you disciplined. I'm going to get you trading the best setups at the best prices. I'm telling you, once you start scaling and compounding this account, it's all you're going to want to do. And what I'm mastering is the first 30 minutes of Market Open. I'm literally done within the first 30 minutes of Market Open. I trade the Market Open. I'm typically done at 10 a.m. Within that 30-minute window, if you're getting in on the options at the best price and you have a nice micro move in your favor, we're talking, depending on the day, 50 to 400% returns on the contracts in one single hour. It could be as early as 30 minutes. When I entered those Roblox puts on Friday, I was up 50% in 1 minute. So I'm going to teach you that strategy every single day, live at Market Open. You will get access to the recordings. You can go back and rewatch the webinars to learn if you missed out on one as well. It's all included, man. You get access to the community. You can add us as a friend on Discord, one-on-one messages. There's so much more to it. You can ask me live questions on the spot within the chat. If you want to check it out, it's the first link down below in the description. As soon as you join, you get instant lifetime access. So that's going to be it, guys. I will see you tomorrow live at Market Open. Looking forward to trading this week as we got some phenomenal setups lined up. It should be another green week. Let's let the green streak continue. Let's continue to do what's best for our portfolios, for our capital, and trade the best setups at the best prices. I will see you guys live tomorrow at Market Open.